All right, guys, let's talk about the top stocks that I'm buying right now today in the market. Despite everything that's going on and stocks like Nvidia just going to the moon, there are plenty of other stocks that are on a great discount that I'm absolutely looking to buy. And there are some new stocks as well on the list that have not been in a buy range for quite some time. So I'm going to give those stock picks to you along with some stocks that are bound to get some of you guys fired up down there in the comments because you don't like the fact that I buy these stocks, and that's okay. That's all part of this journey right here. Let's just say one stock in general is really going to push a few of you guys' buttons, and that's all right. But hey, it's my list, and that's just how it goes. You guys obviously have your own list out there. Just make sure you like the video if you like getting the truth without the hype. And check out the pinned comment down there for my new channel where we talk about financial freedom and retiring early. Again, that's all we discuss over there. So make sure you check out the pinned comment if you want information on that. Subscribe over there. All right, so we actually have a lot to get into today, guys. And no, Nvidia is not on my list. Congratulations to all you guys out there that have invested in that stock. I mean, it illustrates what we talk about on this channel all the time. Exactly what we talk about. Just simply buy great stocks based on valuation and let everything else happen around it. Ignore all the noise and everything else. So great job by you guys, but it's not on my list. I'm sorry. I just don't do chip stocks because I don't understand the business personally. So I can't invest in them confidently like I can other stocks that are on this list. I'm not saying these stocks are better than Nvidia or any other stock like that, but you have to understand what you're investing in before you actually invest in it in the first place. And trust me, I've made that mistake before lots of times. I've invested in things. I've even made money. My last time I did it, I made money on that actual trade. Actually, a pretty fair amount of money. But I was not comfortable the whole time I owned the stock because I just didn't understand. I couldn't tell when it dipped. I couldn't tell, should I add to the dip? Or was the stock actually in trouble? I had no idea because I didn't understand the business itself. And so, yeah, I made money, but I was not comfortable holding that stock the whole time. And that, unfortunately, is just my situation with the chips. I just can't figure out the business models and how all of it works deeper. When you get deeper in the weeds, understanding the business itself, I've never been able to figure it out for whatever reason. Also, remember, these are just the stocks that I'm targeting right now that are kind of in my buy range. There's actually 15 stocks on my watch list, which of course you can join my group there if you want to see the complete list with price targets. But nonetheless, there's a lot of stocks on that list that have run up. And so they're trading a little bit rich right now. So they're not going to be on kind of my radar for right now. They might fall there in the future. Stocks kind of fall in and out of range all the time on those lists. But these right here are the best deals according to my plan, my valuation, and what stocks I want to own for my portfolios that I have. These are the best deals right now. Maybe not Meta good or Nvidia good from 2 years ago. Maybe not that good. Actually, I know they're not that good. But nonetheless, these right here are the best deals right now if you are not trading them. Now, there may be other trades out there that are far better trades. I have no idea. I'm not a trader. These right here are from my perspective, 3 to 5 years out, where they're at right now in the valuation cycle. These are the ones that I want. So stock number one is SoFi. Well, here's one right here that did exactly what we discussed after earnings, or what we thought was going to happen with earnings. Had a nice little run up, and then Wall Street just beat it completely down, despite the surprise, or not surprise profitability, but despite profitability actually happening on the earnings call and guiding towards profitability here moving forward. Wall Street felt the need to beat it back down. So for this stock right here, I decided to do something a little bit different there to kind of illustrate for my group how to just execute a simple DCA to kind of just cut through the noise and a lot of the things like that. Just get in there, execute it, and show it. So I'm going to do that right there with SoFi because I feel that it is beaten down. There's no reason for this beat down. And I just want to add shares because remember, share count matters far more than your average. So yeah, even buying it in the $8 range is significantly above where my averages are for all the different portfolios that I have with that stock because you were able to buy so much of it in the $4 and $5 over the past year, year and a half or so. There was a lot bought back then, but I don't care. Share count is what matters in the end. They're executing wonderfully, and Wall Street's being dumb once again. So I'm just going to execute a simple DCA on this stock. So stock number two is Google. I don't know. This is just another stock that just has earnings, has very good earnings, good guidance, and it's just disrespected for Wall Street right now. I guess everybody's expecting everybody to have Nvidia style earnings or, Meta style earnings. And no, they're not having earnings like that, but it wasn't horrific either for the stock to just basically go nowhere in the meantime. So for me, this is one of those stocks, once again, that, hey, these, might not be able to get it down in the 80s again. I'll happily pile in a ton more like we did back when we got down in the 80s, but I still think it's right around fair value right now, and I don't understand why it's being disrespected. I mean, there's nobody better at what they do than Google. Who's better at search than Google? The number one and number two search engines in the world by a mile are Google and Facebook. They own both of them. Those are the two best by a mile. It's not even close. And the dominance, there's nobody even in the ballpark coming up to take over that dominance. And then the second piece is ads. which outside of Meta, who's the other company, those two are in their own ballpark altogether over here on the side. Everybody else is light years behind. So I still don't understand why Wall Street is just thinking, oh, they're not the leaders or they're not dominant in those positions anymore. They're by far and away dominant with no second place anywhere in sight, or at least in the case of them and Meta right there neck and neck. And then everybody else is way, way behind there. So I don't understand what the disrespect is. I don't know how long it'll last. Hopefully a long time, because I'd love to continue to just add to this stock over the course of time. So again, it's another one where I'm illustrating for my group how to just simply get in there and do a DCA and move on with life. So that's exactly what I'm doing with this stock. So stock number 3 is Starbucks. All right, I don't know what to tell you about this one. It just keeps teasing me over and over again. It keeps getting down to almost juicy levels and then it goes back up. And then you wait a few weeks and then it comes back down again and then it goes back up again. It's just driving me nuts here. So I'm just gonna have to commit to it, just add to it. This is a long-term dividend play for me. It goes from my dividend portfolio there. I don't need the dividends right now. I won't need them for years. But if you're trying to tell me people are gonna drink less Starbucks 5 or 10 years from now across the world than they do right now, I think you'd probably be mistaken with that. And after getting my last bill for my employees for Starbucks, oh my gosh, $8, $9 for a freaking coffee, and not even something fancy. I mean, just a basic latte. It was ridiculous. I'm just like, oh. And of course, there was no flinching at all in terms of buying it. It's not like they got the smaller size or something else like that because the price was high. Didn't freaking care at all. So I have this feeling that represents the vast majority of Starbucks drinkers. And so I don't see that slowing down any. I see more and more young folks drinking it, which of course means more revenue in the future. And if you're hooked on it when you're 6 years old, 8 years old, 10 years old, 15 years old, you're not going away and drinking regular black coffee out of the pot like I do later on in life. So hey, it is what it is. And that's why I want to own the company, because I think people are going to drink more of this and they're going to be able to charge a lot more of it in the future than they are right now. All right, so on to the controversial part of the list, and it's going to get the comment section fired up, and that's okay. I'm ready for it. You guys bring it. I'd love to have a reasonable discussion down in the comments. If you just tell me, hey, you suck or your stock picks suck, okay, cool. Please tell me why. That way we can have an actual discussion and go back and forth. But hey, do whatever you want. It doesn't matter in the end. These last two are going to get folks fired up, so let's talk about them now. So stock number 4 is PayPal. Look, I know. Go ahead, bring it right now. PayPal, I am just as frustrated as you guys are with this stock, with the company itself. But I will say this, even though I obviously went early on it, obviously a lot of you guys went early on it, I can't say that so far the management team hasn't done exactly what they said. And more importantly, they said this was going to take a year plus to execute on, which tells me we're probably not going to see anything really tangible, huge, I'm talking big movers in the business until later in the year this year and in the first quarter next year. So there's nothing to get Wall Street excited right now today in February for something that may not happen until the back end of the year there. Sorry, Wall Street isn't looking like me and you are 6 months ahead of time. They're absolutely going, well, are they going to make any money next quarter? Okay, yeah, we're just seeing regular old guidance. They're kind of boring. Nope. See ya. And they're moving us on to other things like Nvidia and other stocks like that for right now. And that's okay. That's to our advantage as investors. And keep this in mind. And this right here is what helps me keep my mind in regards to PayPal stock. If Apple, over the course of the greatest bull run in history after the financial crisis forward up until 2022, during the greatest bull run in history, if that stock can trade down or flat, and it was by far and away one of the top 2 or 3 winners during that entire time frame there, if it can trade down and flat for a year and a half, year, depending upon the time frame you want to look at there, why is it unreasonable to think that PayPal can be in a downtrend for even longer than that stock was? It is not. PayPal is not as good of a company as Apple is. This is not as good of a bull run as that previous bull run period was. And yet Apple still took a beating like that back then. So that right there gives me hope that if this management team can execute, it's just a matter of time until the valuation kicks in and people start actually bringing it back up to at least fair valuation. And of course, if they continue to improve EPS, like that's what they said their focus is improving that profitability, that right there is going to drive that valuation up quickly if they're able to execute to that. So that right there is kind of what keeps my mind straight with this stock. Now, there's no guarantees. Might very well just be dead money like a lot of you guys are saying out there. I don't know, but I'm looking at the risk reward and it's hard to find a better risk reward out there in regards to valuation than this stock. So I'm probably going to add just a little bit more for like the 5th time. And I'm tired of adding just a little bit more to the stock, but hey, you got to expend capital. And this right here is a great risk reward in my opinion. And finally, we got to the final stock here. All right. Yeah, you guys be ready here. I'm ready for you guys down in the comments. So stock number 5 would be Tesla. Look, I'm not going to try to figure out what Wall Street's going to do, but what I do know is Tesla has a few more rough quarters to go here in this year before we finally start seeing that turnaround with the stock. And right now, the market wants to go with the big winners, the big earnings. Tesla's EPS has been going the wrong way here lately. Net income's, not doing as great as it was prior. Margins are getting smaller. I understand why. We all understand why, especially if you're, been an investor for a while and you've watched my videos for a while. We know exactly why that's happening. Short term, it's a problem. Long term, not going to be a problem at all, and that's going to reverse. But in the meantime, money is not going to flow into Tesla like you think it would at these depressed prices because it's busy chasing other things right now that are red hot, that are absolutely crushing earnings more importantly. There's no way anybody can look at Tesla's earnings and then look at Nvidia's earnings, for example, and tell me they're anywhere in the ballpark there. There's just, one is A++, good gosh. And oh, by the way, the fourth or fifth quarter in a row, they've had A++ earnings. Tesla's earnings, not even, I can't even really give it, I don't know, a C at best at this stage. Now, again, I understand why there's C earnings at this stage. So I don't have a problem with it. I don't see a problem there because I understand what's going on long term there. But I also can't say money's going to flow to it, which means Tesla's going to continue to trade in a range where, hey, it gets Wall Street gets a few down days, a few down weeks. I might very well be adding more Tesla to my portfolio. And if you want to see all those buy and sell alerts in real time, take 5 courses for free. And oh, by the way, we got a new course that's getting ready to launch here, completely redone. It's going to be awesome, 3 times the size. And you want to use our stock analyzer tool for free, be a part of the best 6, 7, and 8-figure Discord out there. Have direct access to me anytime you want, be able to jump on our live Q&As, and there's so much more coming, guys. Make sure you check out the pinned comment down there for my group and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.